And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through these markets one step at a time, taking a look at the indexes, the sectors, individual companies in the news, you name it. Anything important or relevant in the financial markets that day so that a trader can better run their daily routine. We're going to analyze it and discuss it. And welcome back to our show and to our channel here. Hashtag Team Tackle right in the chat for my veterans. Let's start our conversation for the week on the right note. First trading day of August here, and the markets are kind of mixed and a high base consolidation across many of the indexes. I've got Coach Matt, I've got Coach Mark, I've got myself here, your host, Coach Tim from Tackle Trading, and we're going to break it all down. Now, let's bring the guys in one at a time. And pleasantries to begin. Matt, how you doing today on a Monday morning?
Tim, I'm doing absolutely excellent. I'm happy to be here with the crew to break down the activity today in the market, and quite an interesting day in the market. Nice little doji, high base, you kind of nailed that. Clean technical pattern. Looking forward to discussing the entire market today.
Absolutely. And Marky, how are you doing, sir?
We stole some of Matt's Northwest weather, rainy day, and Matt was making fun of Tim and I talking about the rain, old men talking about the rain. But listen, when you've been in a drought, you talk about the rain when it comes. I guess that's what you do from your porch when you're not yelling at kids.
That's not what I said. I said there is not a topic that old men love talking more about than the weather. That's what I said.
It's true.
Listen, I am definitely becoming an old man because I do enjoy talking about it.
And we must have stolen your weather because it's a drought up here in the Northwest.
So, you guys are hot and dry, and we're getting wet here for the first time. We need it,
Yep.
man. We need it. All right, let's talk markets here a little bit, guys. We got another busy week of earnings. We've got some economic data this week. Mark, let's start with you. What are you watching for throughout the week?
Two things, right? Earnings reaction, right? Earnings are coming in. What's the market's mood? There's three things really. Earnings reaction. Got a ton of companies reporting this week. A quarter of the S&P 500, as Matt was talking in our pre-production. Not necessarily, the big names that we had last week, but a lot of those secondary, third-tier names across a number of different industries and sectors. So definitely lots out there. Definitely be sure, because earnings reaction hasn't been just, hey, out there can't be down. We've seen that a couple times in recent. Make sure you know that the trades and positions when earnings are. Second thing is the technical consolidation pattern here on the S&P, right? Little tight range up top. Not unnormal, very common to have. Especially if you bump back, trade a little bit sideways, looking for, something to occur. The tighter and the longer the range, oftentimes you can get some strong movement one way or another out of those tight consolidation patterns. And then the third thing I'm looking at this week is end of the week unemployment number. Jay Powell has said, hey, listen, unemployment still got a ways to go. See if there is any good news is bad news is good news on the unemployment report. The market reaction, most importantly, is what I'm looking for on the unemployment report on Friday.
So yeah, Friday, obviously, end of the week, we're going to get that monthly jobs data number. If I'm looking at this market here, Matt, and I'm thinking about the last couple of weeks of price action, it's really tight. It came up off of that retracement, really, hit the 50-period moving average, fired back off that one Monday sell-off, rallied, and now we've been 4, 5, 6 candles in a row where we're really, really tied into that price action up top. Earnings have been strong. 59% of the S&P 500 companies have reported second quarter earnings. From the numbers I got from FactSet, 88% of those have beaten second quarter earnings expectations. Price response hasn't been quite as strong, but we're also at the all-time highs. I mean, Matty, what is your read here as we're starting another busy week of earnings?
Well, my read technically is we're just sitting in a little bit of consolidation. We got a pretty tight resistance level that I'll break down here in a second. But let's talk those earnings that you guys were mentioning here just a minute ago. I do want to talk a little bit more extensively on it. As you mentioned, Tim, we do have 59% of companies in the S&P 500 reporting earnings so far. So far today, this has been a very, very, very healthy earnings season. 88% of companies have beat the EPS numbers, and that's very consistent with what we saw last quarter. But revenue numbers have been amazingly kept up with EPS numbers, and that is something that just rarely happens. Even before the pandemic, you would talk about a good earnings season being in the 72 to 75% EPS numbers, and if revenue beat by 64 to 66%, you're talking about a pretty decent earnings season at that point. Post, the last 2 quarters and really probably the last 3 quarters in earnings season, you've seen those revenue numbers just do really, really, really healthy percentage beats. Right now, they're coming in at 17% above the expectation. But right now, 88% of companies are beating the expectation on revenue, not just EPS numbers. And we came out of a week where you had the big dogs just absolutely destroy things. You had a tremendous amount of brand names that were reporting earnings last week. Obviously, that's going to be the case when you have a healthy dose of technology and communication companies or discretionary companies that are extremely brand driven. It's going to be a very popular week from an earnings perspective. But with those numbers coming in, I mean, you got to beat on EPS numbers. You got to beat on revenue numbers. You got to do really, really, really good things because the expectations are so high right now from an earnings perspective. This week, and last week we got through earnings, right? I mean, that's what we did last week. We knew the barrage was coming. We maintained price action. We didn't violate anything. We just got through last week. This week doesn't really have a tremendous amount of the brand names that we had last week from an earnings perspective. But this week, I kind of feel this week is as important from a broad perspective in earnings than last week was with all of those really important brand names, and obviously the big dogs like Apple and Microsoft and Amazon and Facebook and Google and so on and so forth. But this week, in communications, for example, last week we were looking at communications as a little bit of a breakout, fading back down into the breakout channel. I really like this from a technical perspective. You're seeing the breakout, higher high, higher low. The higher low is coming in right at that rising 20. You're in between the 9 and the 20. You're testing an old resistance zone over here. I really like the zone that communications is in here. But you're faced this week with a little bit of Activision, Roku, Match, EA, Take-Two, Fox, Zillow, Disca. I mean, those aren't the Google and Facebook, but collectively, it's going to play a fairly big role. And that's just one example. And so you don't have the brand names this week, but I still feel like this week is as important as last week from an earnings perspective. And after we get through this week, man, you're now looking at the back end of earnings and you're getting back to a little bit of normal technical type analysis, normal volatility analysis. But this week is still a fairly important week from an earnings perspective.
Yeah, and we even had one company report here this morning, Square, out of fintech. Obviously they had a really positive price response. We'll talk a little bit about that. But it is a busy week for earnings and a busy week of economic data. But last week was a busy week of earnings and a busy week of economic data, and we didn't get the breakout yet. Still got to get that technical breakout up here, Matt. And it's pretty clear on the S&P. I really see that intraday levels, are kind of shaping up very, very, from a trigger perspective to have some clarity. Where is the exact trigger for you here, Matt, on this S&P 500 breakout?
Well, a couple things. Number one, you definitely see this as slowing momentum, and you see this both in terms of the consolidation, but what you're looking at is intraday. You're looking at the support levels and the resistance levels. You're saying which one breaks first. On the resistance levels, you got a little bit of chop right there between 44.20 and 44.22. That's so tight. You're looking at the 44.22 breakout perspective. You close above 44.22, you got to call that a breakout. And so that would be a breakout after consolidation on the backs of some really healthy earnings. The market, I know I would see this, you would see this, but I'm pretty sure the market would see this as a very positive type breakout where you could see some price appreciation, especially if you don't get any political wrangling over the infrastructure conversation this week. As long as people don't try to make a name out of some discussion point this week, should have a fairly clean breakout here against that 44.22 breakout level on the S&P. When you look at the 30-minute chart, you can also put this on an hourly chart if you want to really kind of clean that up. Me and Frank debates that all the time. Which one's better, the 30-minute chart? Personally, I like the 30-minute chart. I like the detail of it. Or if you want to get a little bit of a bigger picture from an intraday perspective, the hourly chart does a wonderful job as well. And when you're looking at this consolidation, again, you see the chop from 44.20 all the way to 44.22. The breakout channel would be 44.22. You see the very similar thing on a breakdown perspective. You got an intraday level at 43.69, 43.70. That lower end is in this wick. You see a little bit over here, consolidates over here as well. That's in the 43.65 level. And so a violation of that should see some depreciation from a technical perspective as well. Got some pretty good foundations of support under it. Don't expect a lot of volatility on a violation intraday, but that would change the pattern just a little bit. I'm looking topside here. I'm looking at that breakout. I'm looking at 44.22 as confirmation.
Mm-hmm. And you mentioned infrastructure is going to be in the news through the week, and obviously, there's been a lot of chatter over it through the weekend. The Senate actually drafted a 2,700-page measure to start moving it through procedural votes. It sounds like you've got enough Republican support there to get it through the Senate from a voting perspective. These are baby steps in the process of building legislation.
It's not the Senate that is my concern.
That's right. Yeah, and even if
as with most things, it is the House that is the concern.
Yeah. Do you still see it as a positive development here, though, kind of in the general?
I don't think the House and their wish list of what they want is going to stop a bipartisan deal getting done here.
Mm-hmm, mm-hmm.
Now, I'm talking specifically on the $1.2 trillion plan with additional investment of $550 billion over the next 5 years. I'm not talking about the wish list of the $3.5 trillion. That's a completely different assessment.
Different conversations, quite frankly, and
they're different bills, they're different acts. They're looking at it's a different conversation, in my opinion.
Yeah, seems like traditional infrastructure part of that bill with the new spending, like you're talking about, is moving itself forward,
Yes.
and we might get a Senate vote here at some point this week. I guarantee that we will. Actually, it sounds like that is in the process. So, activity there, and I'll be interested to get your take on any of the sectors that are actually moving here in just a few minutes. But before we do that, let's look at the rest of the indexes if we can here, Matt. S&P, obviously, we've taken a look at. Dow still has a very clear technical breakout level, in my opinion. NASDAQ kind of compressing at the top, but high base as well. What are you seeing in these different indexes?
You just gave it, bro. Don't really need an update.
Yeah. What about the rut? I didn't hit the rut.
Go ahead, give that one too.
It's in the longer consolidation. It's right in the middle. All right. We're good. What about sectors then? What has grabbed your attention? We did upgrade materials last week, obviously, and that was one of the areas of the market that performed very, very strong in the past week as well. What are you seeing from a sector perspective?
Well, let's first start with these with the sectors in the more growth areas of the market. That'd be technology, communication, discretionary. Technology, communication, discretionary. You saw a lot of just continuation of the rankings from the previous week because of what the market is doing. And all the big names, the consolidation over the last 7 days in the market. You're not going to see upgrades or aggressive upgrades or downgrades at tackle trading based on consolidation. You see upgrades, downgrades based on fundamentals. You see upgrades, downgrades primarily based on technicals. And so when the market's going to consolidate, you're going to see fairly similar rankings week to week at tackle trading. But that doesn't mean you're not looking at them individually a little bit differently from an actual triggering perspective. When you're looking at technology last week, you're coming into a potential breakout. You consolidated throughout the week. You created a higher level of support. But the reality is, again, you basically maintained your price action last week, and now you're looking at a continuation breakout in the technology space of 154. And so you're 154, 155. And so you're looking at tech right here as a little bit of consolidation right underneath the breakout channel, looking for that continuation on the breakout. When you're looking at discretionary and comms, very similar price action. But I already talked a little bit about comms. I do like the price action in communications from a broad perspective, a little bit more than technology right now. Looking at technology, the technology sector is one of our highest rated sectors with healthcare at tackle trading on the scoreboard. That came right in there at the 15 handle. By the way, did you guys see the new scoreboard? Did you guys see that?
It's gorgeous. I saw it this morning.
Did you see the new scoreboard, Chucky?
I did. In fact, I posted it on the Tackle Trading newsletter for all to see. So.
Oh, I got to show. I got to show and tell just a little bit. Just a little bit. Bear with me, Tackle. Let me go ahead and share my screen this time. So here's the new scoreboard. I'm excited for this new scoreboard.
It's gorgeous.
Sexy. Look at that. Look at that. Tack Train, this is coming to you next week. Look at that. Beautiful scoreboard. Anyways, had to show the scoreboard. But technology and healthcare have been the two highest rated sectors at tackle trading. That doesn't change based on the technicals this week or based on anything we saw in earnings. Both communications, technology, healthcare have all been very, very strong. Technically, though, from a short-term perspective, I like the consistency that's happening in the communication space, even though it's ranked slightly under technology right now. You're looking very clean at 84, and that's number one. Look at the consolidation, but the 3-day movement back down into that support level, and you're fighting for a little bit of an upward movement in price. You do got a rash of earnings coming down the pike with, like I said, you got a lot of the gamers coming out this week with Activision, EA, and Take-Two. You got some of the media companies with Fox and Disca. You got Zillow as well. You got even some of those dating ones like Match Group and whatnot. So lots of earnings here, but technically been very, very strong. Like the support level, and that's a lot of what you start with is, do you like where it's at, right? And you hear us at Tackle Train talk a lot about we like the zone. Well, I like the zone here in the communication space right there at that 82 handle. That seems fairly significant from a short-term perspective. That's right where the 20-day moving average is. You're consolidating in that bull zone, looking for a little bit of confirmation in the communication space. But here's what I like about that confirmation. It seems fairly consistent to me from an intraday perspective. You see this intraday trend line punching downwards. You see a little bit of horizontal confirmation at the 82.90 level. If communications, which is fighting for support at 82 right now, can hold that support level, that's an if. You got to see it first, but it is an if. If you can hold that, you are looking at confirmation above 82.90 versus 83, and I could certainly see some front-running behavior if that occurs going into that potential 84 breakout. So technically, out of what we would consider the more aggressive sectors in the market of technology, communications, and discretionary, you're looking at a fairly similar type price level in all three. Consolidation towards the top end of the charts. You're looking at a little bit of choppy action in discretionary. Technology, you're looking at a little bit of just consolidation, waiting for a potential breakout. Comms got some fairly consistent flag in it. That's why I like it a little bit more. All very similar, guys. The differences is a little bit more consistency on the price levels on this flag here in communications. But again, all very similar. Looking at a breakout in discretionary, looking at a breakout in technology. With everything happening in communications this week, you could see some front-running behavior. If you achieve that 82.90 to 83, you could see some front-running going into that 84 breakout as well. So a little bit of additional analysis there in communications. When you're looking at the more cyclical areas of the market, and that would be energy, basic materials, industrial, financial, you're looking at rankings that over the course of the last couple months obviously have been being downgraded as these short-term downtrends are trying to work themselves out in the energy space, in the basic material space, in the financial space, as well as the industrial space. And so you got some short-term mixed trend analysis in the cyclical areas of the market. I don't think you're really seeing any area of the market dramatically differently this week than say last week. In finance, I think you're looking at the exact same thing last week as you were this week as you were last week. You're looking for it to achieve a close above the 50-day moving average. You're looking for it to achieve a close above the breakout channel of 37, or the right shoulder breakout channel, as you see over here, of 37. And so in the rankings, you're not going to see a significant difference because you're looking at the exact same thing in the financial space. It's infrastructure week. Obviously, it's going to be a little bit volatile, and you're seeing that early today in the industrial space. Threatened to breakout, wanted that breakout, tested that breakout, begged for the breakout. Couldn't do it. Same thing in the finance. Market was trading up on the futures, came right back down on the cash open. You're still looking at it very similar, though. You're looking at that right shoulder breakout, and you're saying, again, like I said in finance, I didn't say you're looking for it to test above that right shoulder breakout. I said you're looking for it to close above that right shoulder breakout. And so you see the test here. Couldn't maintain. You got to see that close. And so you're looking at conservative rankings, but that's who we are at Tackle Trading. We are conservative in terms of our rankings and how we go about looking at the bullish or the bearish bias in the marketplace. And so when you're looking at this space, you didn't really see any upgrades or downgrades in industrials, in energy. And by the way, industrials does not have a tremendous amount of earnings this week.
Mm-hmm.
Energy does. Energy is like you had Exxon and Chevron kind of open the floodgates on Friday.
Mm-hmm.
They're all coming this week. All of them are right behind this week. And so unlike the industrial space, where you're really looking at it from an infrastructure week perspective, plus that right shoulder technical breakout, energy has a bearish retracement that is fighting up against. It's got short-term mixed trend analysis. And then you're faced with Conoco, EOG, Pioneer, you got Phillips 66, you got drillers, you got service companies this week, you got a tremendous amount of earnings this week. It's, to me, that's kind of a stay away in energy this week. There's going to be some trades from an earnings perspective, but from a purely directional position, it's just going to take a little bit of time to navigate this choppiness that the energy space is facing here. You're looking at it again, short term, you're looking at that as a bearish downtrend still. It tried to fight last week to change that pattern, but it simply couldn't. Intermediate, you're looking at very wide range neutrality. And so the projection has to still be down here, coming with all the earnings, mixed data we're seeing from a trend perspective. It's just kind of a stay away until you can really see post earnings, see some price appreciation, maybe see some character changes from a technical perspective. Tough area of the market to analyze, quite frankly. And then the one area of the market that did get an upgrade, quite frankly, the only upgrade that happened last week at Tackle Trading was the basic material space, and you're seeing good things happening from a material perspective. Chemical companies, you still have some chemical companies reporting this week, but for the most part, we're kind of through a lot of those big names in the material space. Also in the material space, you do have DuPont, Eastman Chemical reporting this week, but technically just choppy. Technically here, you got to like the price appreciation, but personally, I'm seeing this as a little bit overextended. You have ran fairly significantly after this failed breakdown here. You've ran fairly significantly from the 79 handle all the way to the 85 handle over the last 2 weeks. Look at this to consolidate, maybe form a flag. I don't like it now, but this thing could clear itself up this week, and it could clear itself up fairly by Wednesday or Thursday if we see some consistent price action. So even though it's a little bit mixed right now, overextended, I do like what's happening in the material space. And for you Trading Justice podcast listeners, I got a special guest coming today. I got a special guest. I got Pete Thomas. I got the commodity precious metal expert himself. I got Pete Thomas coming on the pod today to discuss all things precious metals. So I'm definitely going to get his take on what's happening in the material space, specifically with those mining companies. So get ready for that interview later on tonight with Pete Thomas on the Trading Justice podcast. But again, like the technical price action we've been seeing coming off the lows, just got to navigate this overextended choppiness a little bit. And then, Tim, when you go into what you would consider more of the defensive areas of the market, that would be real estate, utility, staples, and healthcare. When you're looking at those areas of the market, they've actually seen some pretty decent price appreciation and pretty consistent analysis. Real estate has been one of the highest rated sectors at tackle trade, and that comes right at the 20 handle. Consolidation over the last week, fighting against this breakout. You do have PSA and Simon Property Group coming out later this week, but for the most part, their earnings numbers have been really good so far. You're looking at a fight up against a breakout. Real estate does look fairly decent towards the highs. When you're looking at utilities is just a volatile nightmare. It's a tough read to get in terms of the volatility. But like we talked about 2 weeks ago, this increasing support level pivot right on the 50-day moving average, that changed the short-term characteristics of this trend. Now you're fighting up against a fairly important 67 breakout. You're looking at 67, obviously 68 is kind of where you go to that. This week you got Duke and Exelon coming out, two pretty big names from a utility perspective. That could show that could bring some volatility, but for the most part, this is just kind of a cash flow area of the market. You are looking at a fairly decent breakout above 67, but again, where you're going to go besides 68, I like other areas of the market a lot more than the utility, and specifically from a short-term trading perspective, but that certainly goes without saying. Staples has quietly been one of the more consistent performers during earnings season. You're fighting up against a continuation breakout of 72. Monster, KHC, Clorox this week. So you got some fairly big names in the staples area of the market. You're looking at any type of upgrade, it's going to start for me anyways with a breakout of 72. As long as it stays underneath 72, you're going to consistently see that very slightly bullish ranking at tackle trading at 35. Even though you've seen the price appreciation here, guys, I mean, this is a month of data and it's went from 69 to 71. Mm-hmm. That's staples.
That's consumer staple.
Yeah, that's just staples. And so let's don't make a very conservative area of the market into aggressive. And then finally, you have healthcare. Healthcare consistently been one of the best performing sectors in the market and one of our highest rated sectors, if not the highest rated sector for the last couple months. Actually, healthcare maintains its dominance towards the top end of the chart. Doesn't want to slow down.
No.
Yeah. No. This week you got Eli Lilly, Amgen, and mRNA Moderna. Those are some fairly big names, but so far earnings have been pretty positive for the healthcare space.
Healthcare's strength has been really, really impressive. It is our top rated sector. I really appreciate the rundown, Matt, through all those different sectors. Communications and industrials are the two I'm going to be personally watching very, very closely this week, along with all the others. But that comms, retracement that's developing is right in line with what's just flash through a couple of these companies that reported earnings last week. Google, that comms little fade. You got Google kind of developing a very similar pattern.
Little bull flag there
at the top.
Little bull flag there.
Facebook has come back down after, they had their earnings report. Obviously, it brought it down to 4%.
It honestly just looks like a more volatile edition of the sector.
And I still like Snap from 2 weeks ago. Snap in the same thing. I kind of like the fading pattern up here on the top as well. I don't know is that a high base or is that a flag?
It's not a base. It'd be a flag at this point.
It looks flaggish.
It's more of a flag. You see this downward movement drift there, horizontal. It's choppy, but I would put it as a flag.
Yeah.
But again, I mean, the difference is important. Flags, you're looking at, confirmation above that trend line there, whereas high bases, you're looking at that breakout there, right? And the distance, is 5 points. So it's significant.
Yeah. A lot of interesting patterns.
And the thing I like about that snap pattern is the rising 9 coming into the base of the flag. If you get the signal, checks a lot of the boxes for me. And
the reason you probably got it as a flag is you look at that's fairly consistent. There's not a lot of crazy volatility in that space. So I got it as a flag on snap.
All right, very good. Marky, let's run through the commodity market next. I'm going to bring you in here, and crude oil would be the first one I want to talk about. And obviously, it's in a larger range consolidation. Had a nice week last week, giving up some of those gains. Anywhere between 77 and 65 kind of is that range for me personally. Mark, what you read on crude oil?
I mean, that's what we talk. I mean, once again, I mean, big candles, you're going to have big candles up, you're going to have big candles down in the range. And I know there can be lots of hot takes at any given time. And for day traders and stuff like that, you can take advantage of, intraday breaks and all of that good stuff. Plain and simple fact is this, if we get this chop like a lot of us at Tackle Trading are expecting, you're going to have a lot of back and forth. And if you get confirmation off support, that's going to interest me. If you get a breakout of resistance, that's going to interest me. In the middle, I can wax poetically. I could read a Lord Byron poem right now if you wanted to make this going to be interesting. There's going to be a lot of boring analysis on crude oil potentially in the coming weeks.
A lot of hot takes, but we're really in a consolidation. Maddie, what about you? You seeing anything here?
No.
Yeah. All right. Gold next, if we can here.
Now, if Matt had a Lord Byron poem right there, I might have just retired because that would have been made everything, there would have been nothing left to live for.
Listen,
Lord
one of my goals in life, Mark, is to be the guy that brings a random poem to you on any given day.
I'm just saying, I would have nothing left to live for. I have something left to live for now.
While you guys go talk about the weather, I'll go look up some poems.
Get some Walt Whitman, bro. Lord Byron is quite a pull there. I don't know.
Dude, I don't even know. I'm with Mark though. I'm going to go with Lord.
All right. Gold next here. Gold's got to break out of its consolidation range between 1,800. It fired off of that support last week. Had a really, really bullish price response after the Fed meeting on Thursday's price action. Then it banged its head, and we've got this consolidation range. Maddie, until we break out, nothing to see here from me. But I actually kind of like the little candle today, firing back off those moving averages. Anything you want to, kind of highlight here technically with gold?
I haven't added much to the gold conversation, even throughout all of this. My analysis has been, I kind of like the 1,800. I kind of like the 1,800. Oh, I don't like this price appreciation coming into the breakout. Haven't liked a lot about it, but over time, it's starting to stabilize itself. And over time, you're seeing that 18. And again, Tim, when did I say watch 1840? Like...
when it broke out
right here, right here. This is where I said, no, watch 1840, 1840, 1840, 1840, 1840. It stands out to me from a price chart perspective. But here's what I like about it. Double top, pretty consistent. It's the backdrop over there. I like the price levels happening here. This little hammer candle, that little hammer candle there. Look at that hammer candle. Mm-hmm. It's where it's occurring that's important to me. You see a lot of chop there, a lot of chop here, comes in right there. Now, there's nothing here to see in terms of a buy. There's just nothing. Look at all that just garbage right there between 1820 and 1840, right? But what it does do is it resets certain things if it holds. And that certain thing would be from the support level it's running into the potential breakout. You're running from 1790 here, 1790 all the way into that breakout. Even on a momentum candle like that, got just absolutely destroyed the following day. You got a little bit of overextended nature coming into the breakout. Comes down, resets the distance it's running. So if we hold here at 1810, you're coming into an 1810 to an 1840 breakout. You'd like that a heck of a lot more with the ability to price appreciate above that, getting back up into the 1900 level. You do have chop at 1875, by the way, but you're looking at that over time to gravitate back up into the 1900 level. And so, Tim, I am very excited to have Pete on the pod because Pete brings, quite frankly, he brings insights that I get from nowhere else in the precious metal space. And so I'm very, very interested in getting Pete's take on gold, on infrastructure, on the metals itself. And if he's getting, if I'm reading this potential, breakout the same way he's reading it. But again, when somebody like Pete talks, I typically shut up and listen.
Yeah, I'm excited to hear what he has to say as well. And look forward to that podcast. We'll drop that later tonight, tradingjustice.com. Pete Thomas is a recurring guest. If you're a veteran listener of our podcast, you know Pete very, very well. But we'll be watching gold for that potential breakout. The last chart I want to highlight here in commodities is actually the Bitcoin chart. And obviously, we did have a nice little rally last week coming up off of the lows. It took off. It actually, over the weekend, went up and tipped about 43,000. Matt, what are we seeing here technically? Because obviously it's now trading around that 40K mark. It's kind of pinning to that, but I see a healthy development over the past week. What are you seeing here?
I'm seeing the same thing. You got to see this last week and a half really now is this shift in character in Bitcoin. You're seeing a little bit, as you can see over the course of the last month, downward drift. Every time it tried to fight up against resistance just absolutely demolished it. This latest attempt, though, did shift it as you saw that breakout against that short-term downward movement over the course of June through July. Now you're up against that very important right shoulder resistance breakout, where if you break out of that, you're definitely looking at that both in terms of short-term bullish, but you would also be back up into what we would consider intermediate bullish technical patterns as well. And so whenever you see whenever you see something that could impact multiple time frames, such as a short-term trend plus an intermediate trend, you look at that from a multiple time frame perspective. And those opportunities, I don't want to say they're rare because you see them quite a bit, but I do think they're more powerful than, say, just a short-term consolidation breakout. And so when you're looking at this on the daily, you're certainly seeing a potential breakout against that short-term momentum you've seen over the last week and a half. When you look at this on a weekly chart, though, you're seeing this as a head and shoulders technical pattern. And this is a very consistent technical pattern when you actually look at the weekly chart, left shoulder, head, right shoulder. It truly is the most volatile head and shoulders formation I've ever seen in my life that is this consistent, but it is. And one of my favorite technical patterns since post-pandemic analysis has started was the right shoulder breakout out of a failed reversal pattern. It is just, it's the one environment that just destroys any bearish analysis. And so you are looking at Bitcoin this week as momentum going into it on a short term, but you're looking at this with perspective of the weekly chart and a violation of that weekly chart. You got a downward moving 20-day moving average you got to concern with. You got 45,000 horizontal resistance levels you got to concern with. But overall, you're looking at that 41 by 42,000 level right there as ultimate confirmation on multiple different time frames, both in terms of the short-term continuation of the short-term bullish momentum in this movement here, plus the combination of the weekly breakout channel as well. Bitcoin looks like it could be the flavor of the month here at 31 flavors, but we'll see if it can break out.
Mark, are you seeing some chatter in the Bitcoin circles? Are you seeing this bullishness start to pick up a little bit? What's your anticipation?
Yeah, and what I'm really interested in, I'm trying to find good sources on it, is trading volume, right? I mean, it's something we've commented on several times in in the halftime report over the last couple months, right? Trading volume down in Bitcoin, some of that retail participation, that euphoria, that smash the buy button mentality, the real high activity. If we start to see that pick up, coupled with the spot on technical breakdown that Matt just gave, there could be some directional things here, right? And it's been a while since we've been able to say that. I mean, it's been a long while since we've been able to say that from a directional standpoint on Bitcoin. I mean, what's the last failed breakout in late March? Last time we had anything that resembled a bullish momentum signal to the upside of quality. So it's an interesting development, to say the least.
No doubt about it. We got to keep watching it, obviously, and we'll keep an eye on those technicals.
And what I really like is that it's a technical now. It's not is someone going to tweet something? Is someone we can base this off technicals now, and that's really nice.
Yeah. From Bitcoin to a company.
Can I add to that just one comment?
Yeah. Mm-hmm.
Whoever Mark was talking about, please don't tweet. Don't say anything.
His name rhymes with
need
peon.
to say anything to blow up quality technical patterns.
No, stop talking about it.
You
Please.
already have algorithms supporting you. You don't need to convince them.
You're just hurting it over. That's been
Just,
proven.
just want to say, just want to add it.
Absolutely agree.
Oh, that is so going to happen now.
You're superstitious.
I just had to take a deep breath. Okay, we're good.
All right, from a company, or from Bitcoin to a company who
Yeah.
really supports Bitcoin, let's talk about Square here today. And obviously, they did release their earnings on Sunday afternoon. They also had an announcement where they're going to make an acquisition of a company out of Australia, you know, a fintech company. Mark, what was the name of that company? Is anyway
Afterpay, I believe, is the name of the company.
Yeah, and basically, Square is moving into banking. They're a fintech company in general, but they've been moving towards that in general. People can make payments, Matt, and then pay them back later with interest and all that kind of stuff. It's an interesting technical response here today. As much of the action here and the information that I'm interested in is the potential breakout up there of that longer consolidation it's been in for about 6-8 months. Matt, Square, what do we know? What did we get from their numbers? What are you seeing here in the chart response as well?
Well, let me say this. I like the quality of the technical short-term trend coming into this potential 280 breakout. I do like that. What I don't like is the confusion over this earnings report and how they shifted kind of the time frame of the report, but that's just me just being just analytical on that stuff. When you're looking at the numbers, this is a little confusing. Again, I maintain what I said earlier today, where when you're looking at a season where 88% of companies are beating EPS and 88% of companies are beating revenue, and those numbers are coming in 17.6% above the expectation, you have to beat and beat. You have to beat and beat. Square bucks that trend here. Square had a wonderful EPS number come in posted on the overnight. 66 cents against 30 cents. Beautiful beat on EPS numbers. Just destruction EPS. Revenue came in slightly light of the expectation of 4.7 versus 5. And so Square was only one of 12% of companies that missed on revenues so far this earnings season. And so you got a little bit of a mixed data there. And when you're looking at the actual gap down from the earnings numbers, this is very consistent with what I have seen so far this earnings season. When you have any degree of concern in any capacity from a raw numbers perspective, the price response has been down. You have to beat and beat. You have to beat and beat. Square didn't. You saw the earnings numbers come out. Despite the utter destruction of EPS numbers, revenue numbers didn't come in as expected, came down. What happened? The announcement on the acquisition. Conference call. You see the price movement going straight back up, recovers the entire gap down price on the overnight simply based on that conference call. The momentum carries through that. Just really strong momentum carrying through that. So there's a little bit of mixed data from the actual raw numbers that does give me pause for concern, especially when you're talking about it on a major acquisition, which typically doesn't see this type of price movement. And so I do have some concern just from a personal perspective that you're running in the face of what personally I would describe as volatility. And so I do have some concern there. But technically this looks very exciting on a weekly chart. Mm-hmm. You have a very consistent. So despite what I said on the earnings, which is mixed, and I maintain that it is a mixed report. But despite that, you have a very consistent short-term momentum trend coming into a weekly resistance level that you certainly could see price appreciation above. And so I do think Square's in one of those spotlights this week. Now you're into post-earnings assessment. You're looking at it, navigating that weekly breakout channel. And so at a minimum, Square at this point, which has been off a watch list for me for a long time, at a minimum, it goes back on the watch list to see how it navigates this resistance breakout.
Yeah, it's an atypical reaction to a $29 billion acquisition announcement, Matt. Those things
Yeah.
take time to settle themselves out, number one. Number two, Square, as typical, this is typical part of it. They paid 30% premium over the presumed value of this company.
Oh,
And that's very normal. You know, you're going to pay more
I was going
premium.
to say Square got a deal. They usually pay more.
They usually have to pay more. So it's a head scratcher, but you also have to respect the technicals here because this is a company that when it gets going, it can absolutely fly. And that longer term potential breakout on the weekly is
again,
really exciting to me.
I wouldn't anticipate something as consistent as post-pandemic analysis Square last year, but you do have a very successful track record on weekly breakouts with Square.
Yeah, and I'm really, really curious. It's so hard to get transcripts of companies' conference calls the morning of. Usually have to wait within 24 hours.
I want to know what Jack said.
About, I mean, you know, and I'm reading headlines coming out of it, like the CFO was really talking up Afterpay, saying this is a rare opportunity. I mean, they could have got, you know, just people, you know, investors excited, right? You know, I'm interested to break down what sparked this.
It's one of those ones that I want to dive into the conference call. I have not yet had a chance, other than the acquisition that was announced. So I am looking forward to that. But the momentum's real. It's punching against resistance. It might take a little bit to navigate this resistance breakout, but I do think it goes on a watch list.
A couple of the quick stories here today while we're in Stock Talk. Disney next. Another film got released here in the U.S. The Jungle Cruise, I guess, is you know, their most recent edition. They were expected to do about $30 million in revenue. They came in at $35 million in revenue in the U.S. domestic box office. They also did a bunch of revenue, $27 million, I believe, or $30 million extra from Disney Plus, Matt. Another edition of their model, kind of proving itself out that you can have the dual model and actually still put up some decent numbers at least. Disney here. Do you guys have interest in this company? It's got earnings in a couple of weeks here. It's kind of near the 200 period moving average. It's been consolidating now for a while, taking quite a bit of time off. Matt, what you read here on Disney?
Nothing technically. From a trading perspective, nothing.
What about you, Marky? Anything here besides just
the setup I'm waiting for is you have a falling weekly that acted as resistance a few weeks ago. You to form some kind of intraday break. Close above that in a classic. That would also coincide with the general resistance at level from a horizontal perspective. You know, and that can take some time to develop these patterns. Might not get it before earnings, right? Might not get it before earnings. So, and then if you do get it, it might be 2 days before earnings, right? You know,
and let's be clear, you're not looking at that from a trading perspective.
Oh no, it's I want to own Disney. I want to own Disney, and so it's like it's taken off. You know, and I use my short-term trading knowledge to say, hey, this might be the last chance I get at this price for a while. That's the general logic, you know, behind it.
And then one more, maybe two more for me here. Actually, they're kind of combined in ARC innovation type fun type stocks. Zoom Video Communications, ZM, actually, they agreed to make an $85 million payment to settle a lawsuit. If you remember last year, violating user privacy rights, they had all those issues with it and all that kind of stuff. Trying to put that in the rearview mirror. I do see reversal characteristics developing here, Matt. Is there anything here, or am I reading into it too much? Maybe I have a bias towards Zoom, but I'm looking at potential breakout there at 420, 30, whatever it is.
Yeah, maybe. There's better patterns out there.
Better pattern chop on.
They also, in that news report, agreed to beef up security measures to prevent Zoom bombing. So we've never personally been Zoom bombed.
They've been moving away from those type of stories for a while, though. It's
you know, but they did. You know, I found that interesting. You know, and you don't hear those stories as much, but they did make note of that in all of that. So.
And then last one.
What's Zoom bombing?
When
somebody that's not invited, like if someone were to show up on the halftime report right now that Charlie from
Minnesota would have me standing at his door. Do you want me to hang out at your home?
You know, so yeah, so that's what Zoom bombing is. Uninvited guests making an appearance on a Zoom conference call.
Yeah, but
that was last year's stuff, bro.
And that's also people getting familiar with the new technology that they're unfamiliar with. People are more familiar with Zoom today than they ever have been.
Yeah. Last one I want to highlight is Tesla, actually, who was also on our option report over the weekend, TSLA. They got a little bit of an upgrade, helping them develop this little bit of a breakout off of that, consolidation pattern. Beautiful looking chart here, Matt. And this is one of those. It was riding that 200. Now we're getting a little juice. The volume's coming back. We're picking up. What you read here on Tesla on this breakout?
Like it. I like the breakout. I like it a lot. You're breaking out of multiple different things. Number one, it's where you're coming off of. You're coming off the 200-day moving average. You see the chop, but every time it just hugs it, hugs it, hugs it. You got these moving averages rolling over. You see the 50-day moving average playing a significant role there. You see the 200-day moving average. A lot of backdrop of support levels that technicians and fundamentalists would like this type of price movement. And then you see this channel here on the longer term channel resistance also get violated last Friday. And then today with the continuation trigger above 700, there's a lot to like here on Tesla as it starts to wake up.
Yeah.
Where would you target this if you?
I think you got to target this pivot point right here. I think you got to target 755 by 765.
T1
Makes sense.
Yeah.
Makes
sense.
And T2 would be 800.
Yeah, I think so as well. All right, guys, that's all I got from a news perspective here on a Monday. We're going to have another busy week of earnings. We'll be breaking it down one step at a time, but let's start moving into final thoughts here. And let's go to Coach Mark here first. Mark, any thoughts you have for the team out there to help them get prepared for the week? Any things you want to make sure you put out there?
A busy week of programming, as always, at Tackle Trading. And while we'll have the Queen judging us, hopefully mildly, tomorrow, she will be there engaging with her trading lab this evening, 8:30 Eastern. You can find it on the events calendar at Tackle Trading. But Dynasty Trading Lab tonight, 8:30. And then, of course, Coach Frank, as he does every Monday, doing his onboarding. Like, we have so many features, a growing number of features at Tackle Trading as we try to provide more and more value for our members. Frank breaks it down for new people to tackle trading, which include experienced traders, new traders. You still got to, know what's on the platform. How do you navigate? What are all of the features? Where to find the goodies? All that good stuff. Frank breaks that down in his onboarding class that he teaches every week here on this YouTube channel at 7 p.m. Eastern.
Onboarding with Frank, Dynasty Investors tonight as well. We also have our coaching mastermind group here on a Monday. Coach Greg and Coach Frank are going to be holding that at 8:30 Eastern. So busy night of program. Matt, final thoughts from you for the team out there.
Like I said earlier today, we do have Pete Thomas on the Trading Justice podcast coming out later today as well. And, our longtime listeners they know Pete very well, and they probably love his analysis as much as I do. But one of the things that I always look forward to in our conversations with Pete is not just getting his take on the primary metals of, gold and silver, but, his analysis in the platinum market, his analysis in the palladium market. If he's looking at this recent breakout in copper technically as an opportunity. But here's the thing about old Pete. Pete sees trends before we see them because he looks at the underlying data that drives trends in the commodities market far more than anybody I've ever met. And his commentary over the course of the last 4 or 5 years in the Trading Justice podcast has proved very fruitful and very, very really fruitful. For those of you new to Tackle Trading or to the Trading Justice podcast, you guys don't understand what Pete can bring. Pete, and it's because of his 40 years experience in the commodities markets, because of his detail and his data that he basically eats, sleeps, and breathes in the commodity market, specifically metal mining companies. And he always brings something that is on nobody's radar. There's like, hey, Matt, have you been thinking about this lately? And I'm like, no, I haven't been thinking about cobalt. Who thinks about cobalt? He's like, you should start thinking about cobalt. And I'm like, maybe I should start thinking about cobalt. But that's what he does. He sees trends happening from a fundamental perspective before I see them from a technical perspective. And I just love that so much about his ability. And so I get excited. I get excited when I have a chance to interview Pete and just to get his take on the metal mining and commodities in general. So definitely check out that podcast later on tonight. And for your listening pleasure as you navigate this week in the market as well.
Absolutely. And we're all looking forward to it. Guys, that's it for our show here today. If you've not yet done it, make sure that you do click subscribe and click the bell on our Tackle Trading YouTube channel. We're barreling towards 20,000 subscriibers. We're right near that 19,000 mark. We might be able to hit that this week. If we can
Is
get a few,
barreling like we're rolling down the hill?
I guess, or rolling
Like,
up the hill. We're pushing
like
it
what?
down.
Like barreling? Like
I don't, yeah, but we're going to get there. We're going to get 20K. And we appreciate everybody out there who does subscribe. If you're not yet a Tackle Pro, go and review that option report over the weekend with a 15-day trial. I dropped both of those links in the chat here today. And until then, guys, we'll be back tomorrow. Same time, same